Well, what does that downside look like?
I still think there's more downside there until they just look. At some point, you want to go back and revisit when it starts making higher lows. But if you look at it, it's still a downtrend. And when these type of things pop up, think about OPEC, Valdez, and some of these other major stories. They don't just get written off after a couple of weeks. They hang, they linger, and next thing, investors are sitting in quicksand with AT&T, Verizon. Again, the reason I pick those is that they pay high dividends. They look very attractive, and maybe they'll get a good turnaround. Maybe they will get higher lows. But at the moment, until they break the downtrend, again, I think it's a sucker's bet because I do think there's still more, unfortunately, that come out of this negative sentiment, especially we're talking about lead poisoning. And if you don't just clean that up in a couple of weeks and get off the front pages, they're going to be in the front pages for some time.
Yeah, and besides those unfortunate headlines surrounding the lead cable situation, are there other fundamental risks, you think, for these two companies?
Well, they do have a lot of debt, right? So, and look, I've always been in belief instead of having an 8% dividend like AT&T does, just cut the dividend a little bit, pay down their debt, get rid of some, diversify some of their holdings and so forth. So the risk is actually, when you look at a chart and you see it going down in a strong market, you know there's a lot going on. But I would say one thing that keeps coming up about Verizon and AT&T is the debt load that they have, the covering of the dividend. And believe it or not, if they cut the dividend, the stock may go higher because it could give them more breathing room.
All right, Ken, thanks so much for sharing that insight. Always great to get your perspective. Ken Mahoney, CEO of Mahoney Asset Management.